Hello and welcome everyone. Thank you so much for joining us today. Here at Loqate, we are thrilled to be hosting our second e-commerce briefing today with Emarsys. Before we kick off, I have just a few things to cover. This webinar will last about 45 minutes, including our Q&A session. Please enter any questions into the Q&A box, and we will be sure to get to them at the end of this webinar, time permitting. We will also be recording this session and we'll share the playback with you afterwards. On to today's agenda. During today's webinar, we'll take a look at global consumer purchasing behaviors over the last 6 weeks and what top brands are doing to respond and adapt to meet a new wave of customer demand. We won't just look at the trends, but we'll also cover what we can all learn from this data to help you make decisions within your business, no matter what sector you're in. We have a ton of content to cover today, but before we start, let's begin with a quick poll. How are you feeling about your business outlook for the second half of 2020? Please select one of the following, whether it's very optimistic, somewhat optimistic, neutral, somewhat pessimistic, or very pessimistic, and I'll give you a few moments to respond. Just a few more seconds. Okay, and I'm going to close this poll. All right, so I think that we can see that many of you are optimistic. So that is really great to hear. And today we'll be sharing key trends, which should help you keep optimistic about the outlook of e-commerce and the future ahead for many of you on the call. So let's meet today's speakers. I am happy to introduce two incredibly knowledgeable senior leaders with extensive experience in the retail, e-commerce, and data intelligence sectors. Please welcome Alex Timlin, the SVP of Verticals at Emarsys, and Matthew Furnell, Loqate's Global Commercial Director. Matthew, you're first up today, so over to you.
Thank you, Amanda. It's good to be back for episode 2 of our deep dive into e-commerce, particularly the trends we've been observing over the last number of weeks, particularly during the pandemic and the effects on e-commerce more generally across the markets that we serve. I'm proud to serve as Global Commercial Director at Loqate. Loqate, for those of you that don't know, is part of GBG. GBG, if you've not heard of us, is a global technology business that develops solutions to help customers to reach, identify, and to trust their customers. And we work with about 20,000 organizations worldwide, many of whom are in the retail and e-commerce space. Loqate is the clever bit of technology that sits on your checkout page and enables your customers to share their location or their address really quickly and really accurately, often in just a few keystrokes. So that serves a couple of really important purposes. One is that it's a great experience for your customer, and of course, secondly, as a business, you're capturing really good quality location data about your customers. But with Loqate installed on some 15,000 websites of including many leading global retailers and e-commerce providers, we get a unique view of traffic. Typically, an address is captured at the point where a transaction is being completed. So the trends that we observe and the sectors that they sit within help us to get some interesting insights into what's going on. The beauty of partnering with Emarsys on this series of webinars is that Emarsys can go even deeper. And as you'll see when Alex comes in a few minutes time, the granularity of their data will help us to get really deep insights into the cart activity across e-commerce. So we're just going to comment on the traffic across our platform, both in the UK and also internationally. As you'll see, and many observers have commented broadly the same, that we saw a fairly flat trend into the new year. We came out of the holiday period, and as we approached what became the lockdown date within the UK at least, which is the 23rd of March, e-commerce traffic started to ramp up significantly. And we've just carried on watching that trend, and we see that by virtue of transactions, say on the Loqate addressing platform. Whilst the trend remains upwards, we saw a small dip just over the last couple of weeks, but the ultimate trend is still up, and that's understandable, of course, because the high street has broadly been closed, and therefore the only shopping options available in many sectors were online. The rate of growth remains really quite surprising, and I think we've probably all got used to some of these numbers, but they're still really quite remarkable. When we look at the 50 days after the UK lockdown, we were seeing a 50% increase in e-commerce traffic. And in actual fact, as the lockdown stay-at-home continued into 75 days post lockdown, that increased even further to 54% up on this time last year. We recognise that not all sectors were faring equally, and whilst many things were suffering and many segments were suffering as consumers were withdrawing from certain sectors, then others were experiencing really quite extraordinary growth. We commented last time around on episode 1 of these webinars that we saw very clear phases developing, and in the early phases what was being bought recognised or reflected what people were doing, so working from home, buying purchases or making purchases that reflected their new home working and perhaps homeschooling circumstances. What we saw was, as the weeks have gone on into the most recent set of data, is that whilst retail continues to be a beneficiary of the lockdown in various markets, that's still not an equal picture. Grocery and homewares, home goods continue to be high performers, but apparel and other sectors are continuing to show some reduction in growth. A little bit of confidence coming back in some sectors. We still see obviously enormous declines in auto sales, for instance, but a number of the large car sales organisations here in the UK have begun to reopen their doors over the last week or so, and have commented that their online sales have remained strong even though they've opened up their physical locations. So the growth continues, and you can observe that upwards of double in some cases in week on week of e-commerce traffic. If we look at the international picture, then we see something quite similar, that the rate of growth was again quite steep. In actual fact, this international traffic incorporates both North America and parts of Central Europe, and actually the rate of growth after that date towards the end of March was even steeper when we roll in US activity. We know that stay-at-home orders were not consistently applied across the US, but that move to online was absolutely clear to see. In actual fact, whilst again just a small tail off in the last week or so, actually the average rate continues to be very steep, with 72% increase in online traffic in that 75-day period after that mid to late March date. The subsectors look very similar to what we saw in the UK, what's performing well and what's not performing well, with limited opportunities to enter into the leisure market, for instance. Then we see obviously significant declines in travel and leisure, but strong growth in items that are being purchased for the home and to help people deal with the lockdown that they're in. So Alex is going to go a lot deeper than that just in a minute or two. But one area that we began to observe around 6 weeks ago, which has really started to crystallize quite significantly over the last few weeks, is a new cohort, which really should be front and center to e-commerce businesses and retailers online. With everyone at home, with some cohorts being, as we call in the UK, shielded, where they were unable to leave their homes for almost any reason, we saw a demographic emerge of shoppers who perhaps have never either chosen to or felt the need to engage in online commerce. We slightly tongue-in-cheek call them Generation Zoom. These are often older members of the economy who have chosen not to engage in e-commerce for all sorts of reasons, and yet during the lockdowns in various countries have been starting to adopt technology, whether it's to help them stay connected to friends and family, or indeed to continue to receive the goods and services that they desire. Generation Zoom. I think about my own dad, 82, not in the best of health, and yet we've got him on Zoom talking to us on a weekly basis. So that demographic is an interesting one for retailers to be highly cognizant of. And just a comment from PayPal just over the last week or two, where they've seen a 65% increase in the over 50s shopping online. So we're going to comment a bit later on about how we can be ready as e-commerce businesses to come out of this into whatever that new normal begins to shape up as, and whatever shape of likely recession we have to face. What were some of the choices that are going to help us to design our businesses to be ready to meet the needs of all parts of our consumer base, but thinking about this older demographic, perhaps with more consistent spending ability, pension-based income, they could form a really important part of the recovery. So to go deeper, again, I'm happy and privileged to be on the call with Alex Timlin from Emarsys. And Alex, please go into the data.
Oh, and just before we kind of have a little bit about Emarsys, I think this is a really key point because it actually came out on a webinar we ran a couple of weeks back as well, which is for these folks who are making their first ever online purchase in some cases, it's really important that we don't just look at capturing the sale of this new cohort. Now more than ever, that service piece of what happens post-purchase and how do you successfully onboard people to a brand and understand and manage their expectations is really, really important, particularly in an era where supply chains and service centers are under pressure. So we're actively encouraging our clients and people in the wider community to think a little bit about their post-purchase customer feedback programs and being a little bit more aware of the feedback being slightly different to normal because of this new and very interesting cohort, which Matthew has identified as a huge opportunity for businesses. For those who aren't aware of the Emarsys brand, appreciate it's a webinar done in conjunction with the Loqate group. Emarsys are very fortunate to be working with thousands of brands across the world to help power their customer engagement. So we're never on the data business, we're not data brokers. What we are is a platform really helping our clients manage customer loyalty, CRM, and direct-to-customer communications. And what we recognized earlier on in this year is for 20% of our business, it's happening in Southeast Asia. So in China, in Hong Kong, Singapore, but also in Australia as well, in the wider Asia Pacific region. And we started seeing a lot of red flags, but we also started seeing some really interesting trends in this data that we couldn't quite explain. And we partnered with a business intelligence company, knowing that the data that we have, which there's lots of big numbers on the screen, isn't really valuable to us as a business. It's really valuable to our customers and it's really valuable to the wider retail community. And what we're going to be looking at today is just some of the trends and insights that we've been able to see across what is more than 5 billion consumer profiles across these brands, and just what's happening in terms of their engagement digitally, in terms of digital communications, online browsing behavior, mobile browsing behavior, and purchases, to get a better understanding of what's going on economically with consumer behavior and consumer sentiment. And what we are seeing kind of 6 weeks on from the last session that we had with Matt and Co is, if you look at the left-hand side, what you will see is a graph from our CC Insights tool. It's a free website, free resource for people to get this at your own disposal and to download and share the graphs. But the numbers aren't so important right now. I think it does go up to, in the UK, we peaked at something like 150% online revenue growth for the brands that we're working with. If you look at the curve from January on the left-hand side up until May, what we have seen is a very, very sharp rise in online activity. And what we have seen since, particularly in the UK, the US and Germany, is since stores have reopened, we have seen a tapering of online growth rates, but they're still year on year much, much higher than we're expecting. So it hasn't been a huge peak and a huge trough. It has been a gradual build, but what we are starting to see is a real emphasis on doubling down on digital within the retail space, because just because stores are reopening doesn't mean consumer confidence is going to be returned, and doesn't mean that people are going to be really willing to go back into those physical stores. But there are some trends that are saying that as people return to this new normal, retail is going to play a huge part of it. We need to start looking at is to say, if you are a multi-channel retailer, what can you do to make sure that you're still growing your digital properties whilst also using digital to support same-store sales and driving footfall back into those areas as well. So overall, things are in the green, but over the last couple of weeks in particular, we have seen some really, really interesting trends that are well worth exploring and are also pretty important to get a grip on, and pretty important for people to have a viewpoint on. One of the other trends that we're looking at is not just the increase in the number of orders and the increase in revenue, but we've seen huge variability in average order values. And one of the key things that we have seen in the UK as stores have reopened, and also in Germany as only smaller format stores were allowed to open at first, is we've seen a lot of people really incentivizing people to buy both online and offline, which has meant that perhaps some of the erosion in orders has actually been due to an increase in discounting. So we're still seeing, as Matt said, huge increases in web traffic and huge increases in web engagement, with 100% increase in digital engagement year on year for the month of May, and 100% increase in online orders across a number of different categories in our client base. But we are starting to see that revenue growth taper off, but there is a direct correlation with the amount of discounting and the level of discounts, the average discount level that retailers and e-commerce brands are actually deploying to be able to generate and monetize those sales, monetize that traffic. And we've also been looking at not just the sales themselves, but to try and look a little bit at some of the types of products that people are buying, just to get an idea of, is it really grocery and necessities that's driving everything? Or are there some other trends within there that are really worthwhile? I think we covered in the last session that the sales of cheese globally online are rocketing. Why that's happening, I'm not entirely certain, but it is happening. But there have been perhaps some surprising trends as well, in that in the UK and the US in particular, the sales of dishwashers, washing machines, and large consumer electronics have been particularly spiky and prevalent, and that didn't go away instantly. There was a huge peak and then a little bit of a taper off, but we're still seeing almost a 500% increase year on year in the online sales of washing machines. And I think a lot of that is perhaps due to those being larger format stores. So the stores in the UK, the US, Germany, and Australia that showcase large consumer electronics are generally large in terms of their footprint. And those are the stores that are being the least trafficked, and those are the stores that are the hardest to reopen a lot of markets. So it's a particularly interesting trend. I think the other trend that's been happening and has still stayed strong is home activities, activities with the kids, and really around fitness. And what we have seen consistently throughout the year is things like soccer balls and things like the gym balls for home, and basketball shoes and activewear being huge sellers. But that's now seeing an emerging cohort of new things coming out as well, like cycling shorts and roller skates as well. I think there's a big increase in people buying things to do to keep them healthy, keep them active, and to keep them entertained. And what we have seen is a spike in barbecue grills over the last couple of weeks as well, with people, whilst being at home, whilst being in furlough, still looking at how they can make the most of the weather and how they can kind of entertain friends and family on the premise rather than going out to restaurants and everything else in between. And I think some of the last things we'll look at before we move on to some kind of focuses on individual customer stories is just the types of people who are buying. Because I think one of the most interesting trends that we've been able to see is across our clients, we are very fortunate to be able to have, in some cases, 5 to 10 years worth of consumer data through the loyalty programs and customer lifecycle programs that we're managing on their behalf. And for these customers, even those with really well-established, really well-formed CRM programs and great approaches to customer engagement, we're seeing this year, the purple graph versus the green graph, which is last year, that a huge amount of their growth is being driven by first-time buyers to the brand. And that plays back to Matt's point around this generation Zoom. There are new people buying online. There are new cohorts of people who've perhaps never bought online before, never bought from you. And it's been a hugely important process in terms of new customer acquisition that's actually coming during a time of reduced ad spend. So it's a huge opportunity for people to look at how can I get these leads to turn into repeat buyers, these repeat buyers to turn into really loyal customers. But it's worth recognizing that it does take a long time for that to happen. The one I do want to draw people's attention to is the second graph, which is first-time buyers, which is saying that actually year on year, we're seeing almost no improvement in people making a repeat purchase in the same month. So this graph is explicitly people making a purchase from a brand in the month of April. And what we saw was a huge increase in people making their first purchase from brands. We saw very steady rates of people making repeat purchases from brands, but there wasn't a very big rate of people making their first and second purchase in the same month, which means that as we look at people who are really ramping up their digital communications and ramping up the frequency and cadence of their communication with customers, it's worth bearing in mind the message and tone that you put across, because it's not about selling to customers all the time. Just because you have, in some cases, quite literally a captive audience, doesn't mean that they are really going to gravitate towards promotional messaging. You're very statistically unlikely to get a second sale in the same month. So it's really important to look at how you're going to nurture and onboard these new customer relationships to really drive loyalty and customer lifetime value over a longer period of time. And we've also been able to look at the impact in average order value across these different customer lifecycle stages. And what we have seen is that for brands who are making that investment to drive the second, the third, and the fourth purchase from customers and take a little bit more of a longer term view of how they're going to monetize customers, that it does pay dividends. We've seen a huge drop in the average order value of first-time buyers because of this mass discounting and because of the mass promotions that are going on right now. But what we are seeing, and it's something true of the client base and some of the content we're running through in the next couple of weeks at Emarsys, is that the average order values for people who are already familiar with your brand and already buying from you are actually a little bit higher, because brands have been able to personalize offers and be less reliant on this first purchase incentive, and have been able to better monetize that audience and better drive profit, not just top line revenue growth, which is a very, very important piece. And what's always important is to not just look at the data, but to look at the brands and the people behind this data as well. And speaking with Matt and the Loqate team, we thought it was something that we could build on from the last session to really look at the benefits that we have at Emarsys for a rich data set, but the benefits that the Loqate group have in a really rich and diverse customer set. We get a very good global representation of what's going on across a number of different sectors. And whilst some people are having difficulties and some people aren't perhaps in the good fortune or in the fortunate position of benefiting from consumer demand right now, we did want to highlight a couple of different sectors and a couple of different regions where consumer demand is quite strong, and help color that with a couple of client stories and a couple of client examples. So Matt, over to you to lead with a couple of examples, and then I'll hopefully share a few as well from the Emarsys piece that will add a little bit of color and context to the people listening.
Yeah, fantastic. Thank you, Alex. I think the depth of that data is just really, really interesting. And we've both shown you data which is in aggregate. And so over the next 5 or 10 minutes, we'll look at customer stories, which I think tell us a number of things. I think it helps us to see that not every business is faring equally, I think, as we've commented on, but even within individual sectors and subsectors, different businesses, by virtue of how they're responding, are faring perhaps differently one to the other. So the first business to focus on is Euro car parts. Now, this is obviously not high fashion, it's not necessarily luxury goods, but this is something which is a high volume purchase for people that are looking to obviously service and repair their vehicles. Based in the UK, but owned by the LKQ Corporation. This is a large business, one of the largest car parts businesses in the world, or certainly in Europe. What did they see? Well, when lockdown kicked in, obviously their own stores closed. They sell almost all of their products through third parties and resellers. They have a small online presence. And I think what's notable about Euro car parts was how quickly they moved from a B2B2C model, as their resellers closed the doors, to getting directly close to their customers. So the situation for them was looking pretty dire, but they worked very quickly and they moved rapidly to bolster their e-commerce platform to make sure they could handle far more orders directly. And whilst there was some impact in their readiness to fulfill orders, what they've seen is a 50% increase in their e-commerce orders, which well outdid their expectations for how trading was going to proceed during the course of lockdown. Of course, there was the added impact of people being at home with more time, individuals being able to purchase items for their cars that they could fit themselves during the course of lockdown, which is just one of those other side effects of what people were doing when they were at home or perhaps furloughed from their jobs. What's the lesson I think we see with Euro car parts? It's just be ready to get close to your customers quickly. If your established routes to market are impacted, as they have been, organizations that are getting close to customers, connecting with customers quickly and making it easy for their customers are experiencing growth maybe above their expectations. So if we move on to another example, this time Pandora. Probably most on the call will know Pandora, famous for their bracelets. The situation with Pandora is an interesting one. Obviously, they're a significantly large business operating globally in the jewelry space. Significant trade through their high street presence, and again, in talking to Pandora, they had significant concerns as to how their business would fare during the course of their store closures. Again, closely linked with celebration opportunities, they were very concerned about what that would mean during the course of economic anxiety and worry, probably on behalf of many of their natural consumers. What they didn't expect to see was a massive jump in their e-commerce orders, almost 70% increase on their e-commerce platform. Shoppers came in numbers that they certainly had not anticipated. And in a similar story to the previous example, they moved very quickly to ensure that they were ready to fulfill those orders and began to adapt their online offer to acknowledge that against their expectations that consumers were still ready to purchase in the jewelry sector. I think the lesson there we see is going forward, we can't predict necessarily completely accurately the future phases, but just model the different scenarios in your business. Think what may happen if your expectations are not what you would naturally assume. Maybe the modeling of those different scenarios will give you a little bit more room for optimism, just as we saw with Pandora, say almost 70% increase in their online orders. And then a third example from us, which actually we share with Emarsys, Sports Direct. Many of you will have read about Sports Direct as in the UK at least, when all stores on the high street had to close pretty much. They briefly kept some of their stores open, but then had to move to a wholly online offer. But they've seen a substantial increase in online orders, as we saw in the sports and apparel market. Individuals at home investing and spending on sporting goods, sporting wear, and similar recurring lesson: be agile, be ready to bolster and to strengthen your online offer, make that attractive to customers when they have perhaps little choice other than to move online. Make that an attractive experience for them. Maybe Alex, you want to comment on Thomas's comment there?
Yeah, I think that one of the key things that you picked up on as well is just that readiness to adapt quickly to a customer demand. I think what was unexpected for a lot of people was not just the resilience within the luxury sector, but the growth within the luxury sector as well. So within the Frasers Group, you have Flannels, which is an online-offline retailer aimed at the luxury segment, and then you have Sports Direct, which is a value retailer within the sportswear goods that has a very, very broad proposition. Across both of those sectors, which are very, very different parts of their business, they've seen huge upticks that were not forecasted, not easy to deal with, but they also had to deal with teams that were also under stress and didn't really have the capacity to be able to help. And what they did do was to leverage automation. They were looking for opportunities to standardize and optimize customer engagements and to figure out, look, when things are going out of stock and coming back into stock, how can we leverage things like back in stock programs? If something is someone's browsing and not purchasing, is it because of a lack of intent, or is it because of a lack of assortment and size and color? And being able to leverage browse but no purchase is, again, behaviorally triggered programs that they've been able to put in place and then actually just run on a daily basis to say, as and when stock changes, make sure that you're reacting to customer intent to put yourself in the best possible position to look at growth, not just in the moment, but in the days and weeks following it as well. And I think for another Emarsys client, I think we shared again with the Loqate group for AO.com. Again, they were very fortunate in some cases to be in a sector that was seeing unprecedented demand and growth within large consumer electronics. So Appliances Online is the largest electronics retailer online, £900 million in revenue last year. And a quote from their CEO saying, look, our e-commerce offering has accelerated 5 years in just the last 5 weeks in terms of online shopping behavior. The speed at which they've had to ship products, but also how they've been having to deal with peaks and troughs in consumer demand has been a really, really big and meaningful change on their business, which has meant they've had to think differently about how they forecast demand and sales. They've had to move from 16 or 12-week planning cycles into daily stand-ups and a weekly view of where consumer demand is and where product assortment is able to be shipped successfully to those customers. And they actually plan to embrace some of these changes in this new normal they're moving into, to say, look, it's really important that we make progress and make sure that we're a profitable, cash generative, sustainable business, but we also need to be very, very agile. And that key lesson about looking at the agility that we're all having to work under at the moment as an opportunity to actually move and think more quickly as businesses on an ongoing basis is something that we're hearing from a lot of different brands and a lot of different sectors. And what we are also seeing is that hold true in the US as well. We're fortunate enough to work with a fantastic brand in the US in Hannah Anderson. It's a kids apparel retailer, 500 million in revenue, direct-to-consumer brand that's been around since the 80s. And we're releasing an interview with the CEO next week where he talks very openly and very honestly about how they've had to have a shift in mindset from thinking of like a slow, predictable, very well-established business into thinking like a startup again. And we are seeing that mentality of businesses really creating innovation teams and creating teams to disrupt the natural order of things, to be a little bit more agile, a little bit more customer focused, but to not necessarily come up with weird, wacky, wonderful scenarios, but really look at where are the small, gradual, incremental improvements we can make in how we embrace particularly things like mobile, with the huge increase of mobile traffic, and how we can make sure that the e-commerce fundamentals of shipping, delivery, and payment methods are all optimized to make sure that they're reducing friction and providing their customers with a really valuable and differentiated experience. So even in large businesses with a lot of heritage, we are seeing people think about how they can disrupt the norm and be a little bit more agile and a little bit more customer centric to really make use of the opportunities that present themselves now, but set themselves up for the future as well. And we are actually seeing some clients make some really brave decisions during this position as well. So Oz Hair and Beauty is a direct-to-consumer brand that mainly makes their trade through selling to direct-to-consumer, but they also sell to beauty. So they're selling to hairdressers, etc. And they made a decision to look at really doubling down on this direct-to-consumer channel and saying, look, we're seeing a lot of online sales being driven by new customers, but we're worried about how we're going to maintain that growth trajectory. And they've made the brave decision to launch a brand new loyalty program during lockdown to these customers to say, how do I actually get them to engage with my brand in a meaningful way, to be able to make sure not just to points win prizes, but locking experiences, unique access, and gifts with purchase to really drive repeat sales and cross-category sales for a brand that is new to e-commerce and is new to online, but is growing at a great clip. And I think that bravery is something that we're seeing from a lot of different sectors to really set themselves up for success, to say, how do I make hay when the sun's shining? How do I use this opportunity of new customer acquisition as a springboard for my future success? And that echoes in large established brands as well. So Icebreaker is an outdoor brand in apparel. So they're making jackets, they're making outerwear, and they're famous for the use of merino wool. Being based in New Zealand, it's a natural transition. But again, it's a $220 million business that's made the brave decision to be less reliant on discounts and less reliant on product and promotion, and really focusing on their engagement offering and really focusing on how do I turn some of these engagements that I've got with customers now into memorable, long-lasting relationships. And they've launched a new loyalty program during this window to really look at how to differentiate and stand out from the competition, to say, for some people who would not normally have bought Icebreaker directly, they would have bought it from a retail partner or a department store. How do they reward and incentivize that customer to really value that direct to customer relationship that the brand now has, and give a little bit of something back in terms of, again, early access experiences and unique content, to really make sure that they're seeing the value proposition of dealing directly with a brand in it, rather than going through a retail partner exclusively. And I think it's probably a good opportunity to look at what are the different things we can do in this next phase of growth to learn from some of these opportunities and maybe do a little bit of a wrap up. Matt, would you like to go first?
Yeah, fantastic. Thanks, Alex. Well, I think for those of you that invested half an hour, 40 minutes of your time to listen to this webinar, we want to leave you with just a couple of takeaways from both of our perspectives that we hope some of that will resonate within your businesses. I think, three scenario situations that we've observed looking across, say, 15,000 or so, many of those being retail businesses, e-commerce businesses, is that the first of which was we're still seeing often Cyber Monday level activity across our platform, frequently day in and day out. So if our platform is running hot most of the time, we know that for many of our customers that is absolutely the case. So don't hold back in strengthening your online platform, making sure that your systems are able to cope with consistent and ongoing levels of high demand, particularly in the sectors that have been most in demand during the course of both pre-lockdown, post-lockdown, and now the loosening and the opening of some of the retail high street offers. And I think being ready then to deal with the blend as we go from having had no retail opportunities through to a partial opening, what we all hope will become a full opening, but remembering who is going to stick with you online. I think secondly, as we've seen these huge spikes and surges for particular parts of the e-commerce sector, grocery being one, particularly in the UK, but other sectors, as we've commented on particular examples. Not all parts of the retail economy are faring the same way, but what we are seeing is businesses that are making it simple for their customers are doing better. Make the customer purchase journey simple, easy, quick and easy and convenient. Just something as simple as making it easier for them to check out, whether it's their product selection or giving their address. Use the technology that's out there to make it simple for your customers, because many of those are going to stick with you once we move into the future phases, whatever they end up landing at. We mentioned that Generation Zoom, that's a really exciting cohort. Think about how you can best serve that part of the economy. And finally, as we continue to see those surges online, then carriers' delivery networks remain under pressure. And whilst it's been really exciting to see large carriers innovating to make it easier for them to deliver more with the resources that they have, or even building their capacity, they're going to require something as simple as good quality location data. So businesses need to focus on knowing where their customers are so that they can serve them and make sure that they meet their expectations. So just 3 areas that we think we can help businesses to remain able to do the best they can right now. But as we commented on last time, we've seen consumer-driven phases. Consumers are setting the rules during the course of this period of time, and there's no reason to believe they won't continue to do that. So I hope some of that might be useful as a takeaway. And Alex, back to you.
Yeah, speaking of takeaways, there's a certain food delivery service in the UK that I really hope gets their address right in the nearest possible future and sort out my orders. I think from my side, I think a lot of the stuff that Matt's picked up on is 100% true. And what I'd add to that is to just pay attention to the types of people who are now buying from you, and to say, look, now more than ever, key customer engagement strategies to accelerate your growth are really about understanding that how you're going to turn this online organic acquisition from first-time buyers into repeat custom. And it's not going to come from getting them to make another purchase in the same month. It's going to come from effectively using your customer data to really personalize and grow engagement over time. And we're seeing a huge opportunity for people to really re-engage and reactivate some of their existing customer base, and to say, how do I get purchases from people who perhaps haven't bought from me online for an extended period of time, and really win back some of their business, as well as converting some of these new people into customers. But what's really, really important is having a strategy around how you're going to control discount and increase lifetime value with something that is really focused around why is the customer going to engage with you over time, and why is the customer going to reward you with their money time and time again. Whether that's a formal loyalty program or just a really good CRM strategy, it's really, really important that people are looking at who their customers are and effectively using their sales and product data to really personalize and grow that customer engagement over time across all of the different areas of their marketing activities. And with that, I think we've still got a little bit of time left for a little bit of Q&A, but we'll probably want to do a little bit of an exit poll before we do so, I think.
Thank you both so much for sharing these data trends with us today. It's been really insightful and helpful to see how these brands are adapting their e-commerce strategies. Like Alex mentioned, before we jump into the Q&A, I'm going to add one more live poll. And that poll is, which channels are you using to stay in touch with your customers during this time? I'll give you a few seconds to fill this one out. And this is multiple choice, so you can pick as many as you'd like.
Just while we're waiting for that, I'm very curious as to the results because we are seeing a renaissance in direct mail. So, but we'll see whether it holds true.
Okay, one more second. We're going to close this poll. Okay. All right.
Renaissance isn't going very far, apparently.
Yeah, it looks like most of people are saying email and social media, which is definitely no surprise that there's an increase in digital communications. I know, Alex, you covered this last time on our joint webinar, that there are a higher number of emails being sent and opened, and organic social media activity has definitely increased higher, than ever before.
100%. I think one of the telling things about the kind of the drop in SMS and also the drop in direct mail for a lot of people is, I think it comes back to the poll at the beginning, as those are expensive channels and the budgets are the first ones to get put under pressure. And we are seeing now more than ever, people put a big focus on how do I be able to demonstrate ROI, and things like attribution of ads, direct mail and SMS are becoming ever more important because they are expensive channels to operate. But it's a little bit disappointing to see 0% there, but it's always an interesting data point to work with.
Definitely. Okay, I'm going to move on to our Q&A for timing purposes. We have one question from Megan, who says, you mentioned Generation Zoom. What is the number one thing you'd recommend to keep that generation shopping on your site after the pandemic? Alex, why don't I hand it over to you, and Matt, you can also chime in as well after Alex.
Yeah, I think it's an emerging trend, and I think it's something we've talked about for 6 weeks now. But I think one thing people need to look at is inside their own analytics, the proportion of desktop versus mobile views. And I think one of the things that is really up for grabs in terms of how they make best use of their websites for different demographics is things like accessibility and readability. If you're looking at your desktop experience and if you're looking at your mobile experience, if the text looks small to you, for someone who's over 60, it's going to look small to them. And there is a real big opportunity for people to make better use of their real estate on particularly product pages and category pages to make sure that they're way easier to navigate, and actually on a mobile device make use of things like the natural movement of someone's thumb, just to make sure that you're actually using that real estate effectively, but making sure that the text is bold, it's easier to read, and it's more clear, because we are seeing a lot of people complain about terms and conditions and complain about information being too small, and it's actually leading to an increase in people calling call centers or raising product requests. So if you are seeing an increase in people asking for information about a product, that will actually probably have a positive correlation between the age of people who are shopping on your site. It's older people tend to get in touch and ask for information about products. And if they can't find it and read it on the website, it will increase your call volumes and increase your customer acquisition costs.
Yeah, I would just, that's a really, really detailed answer. And I learned some stuff there. I would just add, remembering that this cohort is not obviously a single profile, but the older generation, of course, are not stupid, but they're just maybe less experienced in participating in e-commerce. So keeping things slick, unencumbered with too many steps, and making the necessary choice options as intuitive as possible. And I think an interesting comment that Alex made about the profile of the devices that this cohort may be using. I would just add to that, not to disagree, because I think it's probably true, is thinking about the devices that older ones might be using and who's supplying them. I think about in many cases I can think of where it might be a younger family member that's supplying the device, and in which case they might naturally buy a smartphone or a tablet for an older family member. So they may well be using their old desktop, or they might be using something which is rather more up to date. So probably not making assumptions, take time to learn, but to make it intuitive and slick for the customer.
Okay, thank you both so much. And thank you to everyone that has attended today. We look forward to seeing you virtually at our next webinar, and we will definitely be sharing the on-demand link later on via email. We recommend you head over to Emarsys.com to learn more about their customer engagement platform, as well as Loqate.com, where we have a ton of e-commerce reports, blogs, and resources for you to access. Thank you all again, and have a great day.